You probably already know that Alphabet, the big boss of Google and Waymo, has been killing it in the AI investment scene. According to Goldman Sachs, they've been throwing money at AI like a high roller in Vegas throws chips at a craps table. But they're not just throwing money around for funsies. Alphabet's AI investments are strategic, aiming to make real-world impacts. They're not just trying to make a better mousetrap. They're aiming for the next big thing that will turn entire industries on their heads. Alphabet's self-driving car project has been in the works for years, and they've invested heavily in it. But they're not just trying to make a car that drives itself. They're aiming to change the whole darn transportation game. With millions of miles already driven on public roads, they're well on their way to achieving their goal. You might want to pay attention to Alphabet's AI investments. Who knows? Maybe you could be the next big thing that shakes up your industry. So, stick around and let's dive deeper into the exciting world of AI. Hey fellas, and welcome back to Econify. In one corner, we have Alphabet, the heavyweight champ with a killer language model. And in the other corner, we have, well, no one else really stands a chance. With Goldman Sachs Eric Sheridan in the commentary box, we'll explore how Alphabet rose to the top. Don't miss out. Like this video and hit that subscribe button to join us on this journey. Why is Alphabet so unique, you might wonder? They're not your typical Joe Schmoes, that's all. Even if it means inventing a real-life Terminator, they aren't hesitant to take a risk and attempt new things. Indeed, the Google Brain research team is engaged in the development of an artificial general intelligence, AGI. It's kind of like a machine that can do anything a human can do, for those of you who don't know. Talk about taking AI to the next level. But that's not all. Alphabet's Capital G recently led a whopping $100 million funding round in AlphaSense, giving them a $1.8 billion valuation. AlphaSense is no slouch either. They compete with big boys like Bloomberg and FactSet in the financial data game. The funding will help AlphaSense up its game by incorporating large language models into its products. In 2010, they acquired the artificial intelligence startup, MetaWeb, which helped to lay the foundation for their knowledge graph. Since acquiring MetaWeb, Alphabet has gone all in on AI, with teams like Google Brain and DeepMind leading the charge. They've made strategic acquisitions in AI startups like Boston Dynamics and DeepMind Health, expanding their expertise in specific areas. Alphabet's Pathways language model, PaLM, is taking on GPT 3.5 with a whopping 540 billion parameters. They're launching a new API, signaling a direct challenge to their rival. But before you start panicking about the robot uprising, let's focus on the financial side of things. With a market cap of over $1.4 trillion, Alphabet isn't afraid to put its money where its mouth is when it comes to emerging tech. They are prepared to invest in something that might not yield a return for several years because they have a long-term perspective. You could say they're taking the bold approach. After all, fortune favors the bold, and Alphabet is nothing if not bold. The AI arms race. So apparently, there's an AI arms race going on among tech companies, with big players like Microsoft and Alphabet, along with Amazon, Meta, Apple, Baidu, and Alibaba, all trying to outdo each other in building the best artificial intelligence. According to Sheridan, of Goldman Sachs, this is going to be the dominant investing theme in the tech world for a while. And it's going to cost a pretty penny. Sheridan estimates that these companies will spend tens of billions of dollars to come out on top. Now, who will emerge victorious? Sheridan doesn't even want to take a guess, admitting that it's just too difficult to forecast. But one thing's for sure, whoever wins will pay a hefty price. Even Alphabet, with its deep pockets, will feel the impact in the short term. In fact, Sheridan predicts that the cost of this AI arms race will cause Alphabet's gross profit margin to shrink by 60 to 230 basis points over the next couple of years. Yikes. Of course, Alphabet is no slouch. It regularly rakes in gross profit margins of 55% and up. But even a 2 percentage point decline could hurt. And then there's the risk to market share and revenue. Microsoft, for example, is a runner-up in internet search, but with its Bing ChatGPT partnership, it could steal a few customers and market share from Google. So, who knows what will happen? All in all, this AI arms race is no joke, and it's going to be interesting to see which company comes out on top. But in the meantime, investors should brace themselves for some turbulence. Maybe one day we'll all be getting robot overlords. Just kidding, hopefully. It's good to know that Alphabet CEO Sundar Pichai is keeping the AI dream alive. He has got 3 points he's focused on: language learning models, BARD, AI tools for creators and developers, and commercializing its AI technology for other enterprises. But don't think for a second that Alphabet is sleeping on the job just because Microsoft is all snuggled up with OpenAI. Both Microsoft and Alphabet can make use of their cloud platforms to leverage AI opportunities. Google Cloud, of course, showed some good development. It increased its revenue by 28% YoY in Q1. Well, the AI market could be worth up to $14 trillion by 2030, and with big players like Microsoft and Alphabet, there's room for more than one winner. Alphabet has a massive user base through its various products and services, including Google, YouTube, and G Suite. With some good execution, it could carve out its own space in the growing AI market. So, what's the bottom line? Sheridan says that Alphabet stock is a buy and is worth 31% more than its current price of $124.60 per share. It looks like Alphabet's AI efforts could be a game changer after all. But even with all that cash, there are still challenges ahead for Alphabet in the AI investment race. One of the biggest challenges is the shortage of AI talent. It's like trying to find a needle in a haystack, except the needle is a highly skilled AI expert and the haystack is the entire tech industry. Companies like Alphabet are in a talent war, offering huge salaries and perks to try and attract the best of the best. And then there are the ethical implications of AI. As AI becomes more advanced, there are concerns about how it will be used and who will control it. It's like that old saying, with great power comes great responsibility. And let's be real, we all know there's always that one person who takes things too far. In this case, it could be a rogue AI deciding to take over the world. So, how should investors interpret all of this? It's not just a passing fad or a buzzword anymore. And as AI continues to advance, it's going to create all sorts of new opportunities for companies to innovate and grow. But at the same time, the competition is fierce, and not every AI investment is going to pay off. There are going to be winners and losers in this race, and it's up to investors to do their due diligence and pick the companies that they think are going to come out on top. That's obviously easier said than done. It can be challenging to distinguish between hype and reality in the complicated and fast-expanding field of artificial intelligence. Eric Sheridan and other specialists can help with that, though. They have a pulse on the market and may offer insightful information about the businesses that stand a good chance of succeeding. Well, as time goes on, it is evident that the race for AI investment will only intensify. We'll witness the emergence of brand new technology and uses that are unimaginable to us at this time. And for investors, that means there has never been a better moment to invest in this fascinating and possibly lucrative industry. We have only begun to scratch the surface of AI's possibilities since it is so enormous. It's true that some individuals aren't all that excited about what AI promises, including those who are concerned about job loss, privacy concerns, and immoral usage. But there's no denying that AI will be crucial to over time to come. We need to tackle these concerns as we move forward. The AI investment race is heating up, and according to Eric Sheridan, Alphabet has emerged as the leader. But that doesn't mean there aren't other companies worth investing in. As AI continues to advance, it's going to create all sorts of new opportunities for innovation and growth. So whether you're a seasoned investor or are just starting out, it's a field that's definitely worth following. And who knows, with just a little bit of luck and a lot of effort, you could very well find yourself at the fore of the next major AI breakthrough. Happy investing and thanks for listening.